I will call, are you ready, Miranda? Sorry.
Yes, sir.
All right. The October 27th, Richland County Executive and Finance Standing Committee to order. Roll call, please.
Caro.
Here.
Schoonover.
Here.
Kramer.
Here.
Manning. Turk.
Here.
Frank.
Here.
Okay. Severson.
Present.
Williamson.
Here.
Cooey.
Here.
All right, you have 8, sir, for a form.
All right, thank you. And I assume we are in compliance with our open meeting law.
It's been properly noticed, sir.
Agenda approval, 13-point agenda in front of us. Looking for approval. Supervisor Kramer, seconded by Supervisor Schoonover. All those in favor of approving the agenda as presented signify by saying aye.
Aye.
Aye. Anyone opposed? Okay, thank you. Agenda is approved. Minutes from our October 14th meeting. The minutes from the October 14th meeting. Anybody see any issues? Corrections? If not, I will declare them approved as presented in our packet. Public comment. Item 6. Shirley Welty was the only form I received to start out with. Go ahead, Shirley.
Good afternoon. Thanks for the opportunity to speak with you today. I am excited to learn more about the ambulance service update, which is agenda item number 9. I've been participating with the Joint Ambulance Committee since April when Dayton Township appointed me to represent them, represent the township on that committee. During the meetings, there's many questions that are asked around call data, finances, receivables, collection policies. And while the interim director has made great efforts to share information, the information isn't presented in a clear fashion, and it's been challenging for everyone. I think she's doing the best job she can with the information that she has, perhaps, but there is really a need for much more clarity around that information. I think it would help answer many of the questions about whether is the new contract call count accurate, are all efforts being taken to manage expenses as well as collecting the payments that are due to the ambulance service. So I'm eager to learn more about what might be presented today, and if the information, the call data, and the policies and practices aren't presented tonight, I think it would be a really important step to take to share some of that information. Keep it confidential, keep it high level, but I think the information needs to be shared. Thank you.
You're welcome. Anyone else within the confines of this building? Public comment? Anybody online for public comment? All right. Hearing none, we'll move on to item 7, reports. The administrator's report.
All right, so my first update is that we have had 5 different open enrollment meetings for staff to attend. In total, we had about 160 employees that attended. Open enrollment will end on October 31st. And just as a reminder, we partnered with the Insurance Center, and they've really taken the lead on these meetings and created a benefits guide for the staff to have. So this has been really nice and helpful for the staff to have something that really outlines everything that's available to them. We are continuing to work with the different emergency response agencies in the community to ensure their radio programming needs are met. There are still a few agencies that we haven't heard from, and so we did send another email out to them, and Mike Day is also trying to personally reach out to all of them. If we do not get a response from them by the end of the month, we really will assume that their needs are met. And the goal for us is to send out agreements for the reprogramming of the radios the first week of November. We will then work on organizing trainings so that everybody is able to utilize the radios and understand how they work once we go live. The RFP for Corporation Council for 2026 has been posted to the website. I put it on VendorNet. We sent it to just sent out some information to different law firms just saying it is out there on the website. And the plan will be for the RFPs, the proposals to be opened at this committee on the November 11th meeting. And then one of the other things that we're going to be working on between now and the end of the year is we need a new civil rights plan for 2026. So I have reached out to Southwest Regional Planning to see if they are able to help us get that completed as they completed the last civil rights plan. So that is my update.
Anyone with questions for the administrator? Supervisor Schoonover.
Has the Yuba Fire Department reached out to you with the information and everything?
Yes, they're ones that we've been communicating with. Yep.
Supervisor Carroll.
I'm not familiar with the civil rights plan.
So that really just talks about, and it's on our website, so if you go on our website, and I think it's listed on the right-hand side of like additional plans or proposals or county specific, it is a requirement that we have a plan that basically says we're going to treat everybody as equal, we're not going to discriminate against anyone, all of that.
But you're saying we have one currently?
Currently, yep, it's on the website.
All right, I'll look at it.
Yep.
Good. Further questions for the administrator? How about Mr. Cooey or Mr. Frank?
I'm good, thank you.
Yep, same here, I'm good.
Thank you. We'll move on to radio tower and project update 7B.
So I do have that in the packet for you. As you can see, the green is the the work that has been completed. The yellow is yet to be completed, so some of that green or the white with Yubas because we don't have anything ready to go yet. We're still working on the civil work there, but things are progressing pretty good. We did get our last couple of frequencies, which has been wonderful. That's a huge stress that we no longer have to worry about. So overall, things are going well.
Questions, Mr. Carroll?
Since we're toward the end of the year, I was wondering if we could get at some point, more comprehensive one with the dollars and the finish dates, a more complete report.
The finish dates, I will get as best as I can. We're waiting on
That's all we
Gen
can
Con for
do.
that. But we can give you the most up-to-date budget and where things fall.
Anyone else? Mr. Schoonover?
Just wanted to say I drove by the Yuba site just last week. They were installing the underground power cable to the site. There's no tower whatsoever there yet. There's nothing there. So you're gonna have to hurry.
Yeah.
But it does look like the retaining wall and all that is done. And if they get power there, then I would imagine that they can really get it in.
I think they have a date set to put the tower up. I think it's there, it's just not been
Could be.
put up yet.
Further questions in regards to the radio tower project? Hearing none, let's move on to item 8, discussion and possible action on informed consent, Corporation Council, item 8.
So this is, as everyone received last week, a letter from Mike Wendell regarding the ambulance service that he has to step down in representing us because of the conflicts. He then asked us that we follow through with the informed consent. We did consult with Andy Phillips today, and he requested that we hold off for him to have an opportunity to review everything. We will have a chance to look at this again at Executive and Finance at our next meeting, and then take it to full county board.
Everybody, go ahead, Mr. Carroll.
So what Corp Council services do we have then right now?
We still have Corp Council services related to the ambulance service. We do not, but we have reached out to Andy Phillips and are consulting with him on that.
Got it. And Matt is online, who works with Andy. If you have anybody has any questions in regards to it, so they're just listening in. Bob and Mark, you're good? Andy's gonna review it. Andy will review it and we'll bring it up in 11 of November meeting. Okay. Any other questions in here?
So what are we doing in between then, Mr. Chairman? Like, I see we got a letter from Boardman Clark.
That's what Andy's gonna review.
Okay.
They're gonna review that. I think,
We met with them today. Dave Turk and I both met with Andy Phillips and Matt today to start discussing that letter and to look at next steps.
Just a question, then, the new people that are coming on board is just for the ambulance service, or will it be for the entire county board?
I think just for right now, the ambulance service and then the information regarding informed consent and the letter we received from Mr. Mendel.
So any other matter that Mike Wendell would normally work for us on, he's still doing.
Correct.
And that's what the RFPs went out, and we'll be going over them as far as corporate counsel that she talked about in the report. Those just went out to get pricing, so.
Next year.
Yep. Further questions? That answer your questions here, Mr. Severson?
Kind of, but there's a time stipulation within that Boardman Clark letter that I don't know if the municipalities are willing to be flexible with. So there's a November 1st deadline that they mentioned in that, and we're not going to meet till, you said, November 11th, which is obviously 10 days after.
Right.
So what Andy said when we talked with him today is that he will be reaching out to their legal counsel to talk about next steps.
So have we retained Andy Phillips as our
Yes.
counsel? We have?
Yes. Yes.
Yes, they're for this, for the ambulance service stuff, so. Further questions?
Do we need approval of retaining Andy? Because we already have corporation counsel, but then he's,
We've got him on contract. we've used him before.
okay, so he's like our second backup corporation counsel other than the
I guess you would
Since
see.
it's your
or the
description,
assistant
yes.
DA? Okay.
Because we
Yeah.
also use Johnny Anderson, you know, in their
Well, he's our labor, yes.
issues, yeah.
Yeah, we've used Andy multiple times in the last year. In 24 as well. Okay, any other questions, comments? All right, let's go on to item 9, discussing possible action on the ambulance service updates.
So this is something that was requested last month, and like Shirley talked about beforehand, there are lots of questions. So now that we have a finance director, Leanna has been working very hard on doing a really deep dive and an overview of the ambulance service. So I will let her take it over, and she can start going over everything.
All right, thank you. So, let me just get my screen up here. You've got in front of you a packet of the items that I intend to go over. So my name is Leanna Pick. I'm the finance director. Started about 2.5 months ago. Some days feels like I've been here 2 years already. But, all right, so let's see.
I'm going to stop sharing the
Okay.
Did you bring extra copies?
I do have
Okay.
extras if anybody needs one. Okay. Sure. Okay. I think that looks, yeah, don't look at that screen. That one looks pretty good. And you got in front of you the same information. So there's a lot going around, so I kind of wanted to start with some of the things that I've heard over the last couple weeks and just discuss them and also discuss kind of my findings because Administrator Clements came to me about a month ago with this and said, hey, can you deep dive into the ambulance? Can you pull together some data? You know, give me your thoughts on it, where we're at financially. So I put together this, and one of the things I first noted was, so what you got in front of you to start with are balance sheets. There are 2 of them, and there's a reason there's 2 of them because I just really wanted to illustrate kind of the balance sheet itself is at a point in time. So if you ran it the next day or day before, it could be different than, you know, what you run at any other day compared to like an income statement, which is ran for a period of time from January to December typically. Okay, so what you have in front of you is a balance sheet as of October 31st, which I know we're not there yet, but we have already started booking some month-end entries that we typically do because we can't wait till the end of the month to do them. So I ran that as of yesterday, and then I also went back and pulled one that I believe you were given or presented earlier that is from August. So there's a couple of things I want to note here. So when you look at total assets, for both periods. So if you were looking at the August report, it said that your total assets are $289,000. So then if you look at October 31st, it says it's $108,000. So somebody might think, well, what changed here? Because I can look at cash, the top line there, and I can see, well, there was no change in the actual cash balance there. But there was a change, a small change in claim on cash, which we will discuss that too and what makes that up. And then some changes within AR. But the biggest change comes in the box called allowance for doubtful accounts. So we just recently got our audit wrapped up from 2024. And as part of the work that our auditors do is they review our accounts receivable and they look at all the balances, they verify them, and then they decide based on previous data, kind of what we've written off and where we're trending right now, what's really going to be uncollectible. So if you're looking at this balance sheet and you can say, well, we've got stuff out there from 2016, 2017, 18, 19, 20, and so forth. Well, what the auditors decided really at the end of 2023, the number you see in the August statement there, the 175,000, that was what they decided at the end of 2023 was going to be uncollectible. It runs at about approximately 40% of our receivables are uncollectible, which means we're not bringing that money in. It's never going to be cash. So they decided that at the end of 2023, and that's where that entry came from that you see there on the August balance sheet. And that number really adds up to, I can show you, and this is in your packet as well. I can get this little thing here to go away. Go here. Get there. All right, so this is showing me my AR, my uncollectible by year. And you can see kind of how I've highlighted this blue section here, and you can see 2022, 23, 24, 25. Literally no change in those balances. And those, if you sum those up, you'll find they come to $174.6 thousand. So pretty close to our $175,000 that the auditor said at the end of 2023 was going to be uncollectible. So they're really saying, we have huge doubt that you will ever collect any of these amounts from 2016 to 2022. That's why they created a reserve, an allowance for doubtful accounts, saying this is bringing down the value of your receivables to what they believe we will actually collect on. Sure.
Mr. Chairman,
Yes, Mr. Seavers.
are there any specific laws, federally and state, that restrict that, what you're talking about, with those uncollectibles?
For putting an allowance out there?
Yeah.
No, that's just generally accepted accounting principles.
So Medicare, when they billing, they pay a certain amount, that's it. But we may bill for a bigger amount,
Correct.
and we will not receive that amount because Medicare, which is a federal, right, and state, say, we're only gonna get this, correct?
Mhm, correct.
So I would like that, make that known, that yes, this looks like a big number, however, our federal and state are telling us differently, that this is what we're being able to collect.
That's not part of their doubtful accounts.
No,
That's already written off immediately.
Yeah, so they're not sending that. That's taken care of really on the front side of it, I believe, as part of the billing that you're doing. I'm not going to claim to be an ambulance, all-knowing when it comes to billing to Medicare or Medicaid. Okay, but what I can tell you in terms of accounting is that this is done at every place that I've ever been at. We will review our accounts receivable at year end, and we will look at the total and say, based on everything we've seen this year and in our previous years, usually in like a corporation, you'll look at it's about 2% of your annual sales or 3% of your annual sales that will say are uncollectible. And they'll set up a reserve for that.
Some of what these are, and you can correct me if I'm wrong, is the deductible. So an ambulance call goes out, insurance says, we'll give you this much money, Carrie, you have to pay the remaining to meet your deductible. That's a lot of what our uncollectibles are, is that information, is that money.
Yeah. And we
Correct me if I'm wrong, but that account is strictly internal bookkeeping. It's not, I mean, it's a living account. So if you suddenly collect on accounts you don't think you're going to collect, you can reverse that out of there and it becomes a
That is
revenue.
correct, you can do that. Yes, or you could take it against, like, we're doing kind of a combination of allowance for doubtful accounts at year end, but then we're also doing direct write-off during the year. So when I point out our 2025 receivables, you'll see that that's a very small number, actually. And that's because throughout the course of this year, each month, our billing company, our third-party billing company, is sending us anywhere from $20,000 to $40,000 of direct write-off related to 2025. Okay, for the current year. And then when our auditors review us at year end, they're going to look at that balance and they're going to say, of this, I think it's 150,000 or so that remain right now of your AR, how much of that do we believe you can collect? And it literally, in their working papers, they are shooting at that 40% range. And we haven't got there yet because we're still on the balance sheet, but I do show you on the income statement where these are showing up. So if we can kind of continue, it might answer some of these questions. I don't know if I'm allowed to answer.
Leanna, this is Barb, but those numbers for the AR for 2025 are not the numbers I'm getting from the billing company.
Well, then there might be a disconnect there because Tammy Newberry is giving me the reports that are coming into our office. So if there is...
I forwarded them to Trish the other day, and they're about half of what I'm getting reported.
Okay. I can't really speak to that, so we'll have to look into that. I can just know from the information that we are being given in our office and entering into Tyler, this is the information that we have. And I can show you on, let's see here, there's one that shows it really well here. Sorry to bounce around here. It's in this one. So we didn't talk about this line yet, but this is the other line called the claim on cash that sits on your balance sheet. It is a rolling number. It does not go away at the end of the year. It just gets plus or minus to it. So you can see on your balance sheet for 10/31 that their claim on cash is minus $186,000. And that is made up of our year-to-date cash receipts. So what we've actually brought in for cash, $470,000. And then it's going to be less our accounts payable. We had a small reversal of something that might have got messed up, so we fixed that. And then we had payroll, and then a little correction to payroll there. And then if you look at this column here that says journal entries, so it was higher at the beginning of the year, and that's because we were just getting on Tyler, and some of the payroll entries and stuff were going in there then too to get them booked before we went live in Tyler's system with payroll in April. So you can see things kind of start coming down in your journal entries there, but you've still got all of these that were written up as uncollectible. There's also various other journal entries in there. So let me see if I can, June's not a great month. Let's look here. So, I'm just going to find them here. So they come over as part of the AR, and an entry is booked by Tammy every month that has our uncollectible in it. I'll show it here, but I have another report that actually shows it. So I don't have to dig for one here. So I pull this open. And this one, this summary is in your packet. Here. Oh, it doesn't show it there. I'd have to pull it open another file. But I will get you that information. I know what you're talking about. There's a spreadsheet that she sends you. It's in my mail, but I don't really want to open it because there is very sensitive data within that file, so I don't want to open it live, but I can get it to you after this meeting. That shows what they collect each month, what they bill us for charges each month, and then what's left.
Ask a question?
Go ahead.
I have two questions. Can you go back to the spreadsheet with AR number, collectible by year?
Okay?
I just want to make sure I understand it. Is this telling us that allowance for doubtful accounts all the way through 2022, there were none?
No, that's not true.
What's it telling me then?
This one isn't showing you that because I did not go back and pull all that. The allowance itself for doubtful accounts didn't exist at that time. You were doing a direct write-off. And a lot of it was going through the board, and the board was approving the write-offs prior to having an allowance for doubtful accounts. The first time I see the allowance for doubtful accounts come into play is really in 2023, where they started putting it on the balance sheet there. What I can show you, if we kind of skip past the balance sheet here for a minute, I'm going to go to my comparative income statement. And you have this one.
Question then.
Okay.
So since 2023 then, we've been accruing doubtful accounts without writing them off each year. Am I saying that right?
We've been writing some off. Let me show you. I think this might explain a little bit more. So this is your income statement. Top section here is your revenue. This is what you're bringing in year to year. Got 2019 through 2025 in here of all of the information of the revenue we brought in, and then I got all of the expenses listed. And if I go to the very bottom of the expenses, there is a line here called insurance write-offs. We used to kind of book it in what they call bills for no line detail. I just moved it all up to insurance write-offs. That is what it is. And this line can show you in 2019 you wrote off $331,000. The next year was $360,000, $394,000, $350,000, $494,000. So big year in 2023, really wrote off a lot. That includes that $175,000 that they made us make an entry for at the end of the year, went also into this expense line. Okay, so if we did just a little simple math here, this minus the 175,000. Oops, I might have put one too many zeros in there. 175 million, we wish, but okay. 319,000. So relatively in line with everywhere that you've been every single year in terms of write-off. So you can be bringing in what it shows up at the top in terms of your actual revenue, 800,000 to $1 million, but you were writing off 40% of that in any given year. So, you know, you either have a revenue problem or you have an expense problem. It's kind of twofold. We have our revenues there. We are not, I think, doing a good job in collecting on it, but I can't speak to the, you know, how that's all done and the third parties involved, okay? So, but what I can speak to is what I see in the numbers. And the numbers tell me here, when I'm looking at average revenue over this time span of 2019 to 2025, your average revenue coming in from invoicing is $800,000. Then over that same time period, we're bringing in what we have are the contracts from the towns, which everybody was questioning. And you can see that revenue is going to Fund 51. And it is there, 2019 through 2025, of everything that we've collected from the municipalities. And then there's a little miscellaneous revenues in there. Sometimes there were grants that come in from the state, other sorts of funding. That's going into this miscellaneous line down here. And that's averaging about $18,000 a year. So, you know, over those years, we've averaged $951,000 of revenue in the ambulance service. But in that same time frame, we're also averaging $1 million in expenses. We're spending approximately $100,000 a month to operate and run the ambulance service.
So for this current year then, the auditors would say we need to write off $374,000.
This year so far, I would look at the balance sheet right now as it stands. And so the one I ran at the end of October said we had $197,000 for 2025 revenue. They've already reserved for everything prior to 2023, or excuse me, 2022 is that 175 that we mentioned, the 175,000 you saw on your initial balance sheet. Then last year, end of 2024, they said Well, I think you need another 198,000 on top of that for what you've collected and what you're looking at for 2024 for your AR. You're not gonna collect it. The more time that goes past, the harder it is to get this money. And they realize that, I think everybody does, and that's why it's such a large allowance out there. What we could do to clean this up, we could potentially take that 175,000 that we had reserved at the end of 2023, and we could write off everything up to 2023. Then we would be carrying those 3 years, and that's technically all we really need to be carrying out there. And if something older comes in, you have the option of, you can reestablish it, count it as, revenue that came in from a prior year, or you can take that credit against your write-off account as well. You've got 2 ways of doing it. In the write-off account, the bad debt expense, so it's allowance for doubtful accounts on your balance sheet, and it's bad debt expense on your income statement. Those are the 2 that they're hitting. So at the end of 2024, we increased the allowance 198,000, and we increased the expense 198,000.
I'm just trying to understand if the 2026 budget we've done has
Oh,
a reasonable amount. for
Yes, it
writing
does.
off.
We, right now, when I looked at it last week, we have 400,000 that we're considering to be uncollectible in our 2026 budget, which is in line with what these numbers show you. Okay. Any more questions related?
I've got one.
I just have a question. Where are you getting your figures as opposed to Barb, and how can they be so different?
My figures as the finance director, I am pulling them directly from Tyler this year,
Is
and
that the billing company?
Tyler is our ERP system.
Okay.
And it was implemented in January this year to have an ERP. We went from a green screen AS400 system to a Tyler ERP system. So I'm pulling anything newer than 2024 is in Tyler. Everything else, I went back to the AS400 system and I ran the reports and I pulled out all the data and I brought it into here and I gave it to you in these spreadsheets that you have. So you have everything that I have that's in the system, that's been audited, that is part of the book of record.
But why does Barb have something so different?
She's getting reports from the billing company, which I've also seen those, and I've looked at those. I did pull in just a little bit, again, because of all the confidential data in there. I couldn't pull in everything. But the one thing I wanted to point out in what I saw in the Unified Billing Report, so this is everything that they, Unified, has billed since the beginning of the year till now. So I can, sum this up. You've got just a little over $1 million. And the first payer string is, this is kind of who's responsible. It doesn't mean a lot to me. I recognize Medicaid, I recognize patient. But if you unfolded some of these, this is just a pivot table, so I've got it kind of summarized and I'm showing you what I think is a bigger issue within this billing. Not so much the Medicaid, Medicare, and the private insurance companies, as much as it is things that fall under patient responsibility and patient paying for them. So they have no insurance. I don't know if at the time of the service that we're not doing our due diligence and collecting that information. I'm not going to speak to that. But what I am going to speak to is that in looking at this report and saying, okay, patient responsibility this year that they're working on collecting on is $178,000. Well, I don't know about you guys, but costs have gone up and everybody is pinched, and I don't know how likely it is when somebody doesn't have insurance that we can collect on these items, or how much due diligence the third party is doing to collect it. In the auditor's report, it said that they had to make 2 phone calls and send a letter. Well, my history, I wish that was pretty nice, in collection terms. But I think maybe there's some work that we could do there,
Let me get this gentleman right there.
Just one question. So you're saying, where it says ambulance fees invoice, that's actually what you billed, not what you've received?
Correct.
So like my business, we use our income we've got, and then we just separately, we write off what we didn't collect. So really that, what your total is, it's 838, is really where you wrote off there. what are your write-offs? I lost what that was.
325.
So your income's not 838, it's 260, it's you subtract your write-offs out of there to what really your income is.
That should also
Yeah,
include your
such a-
Medicare, Medicaid write-offs.
The stuff
You
that's,
have
it's not collectible stuff.
private insurance negotiations as well.
So what is that number really then? The 838 is really your actual income is what?
The actual billing that we've done, the actual revenues we have billed for are the 838. The uncollectible is another part of it. Most businesses don't have that large of an uncollectible pool unless you're in maybe the medical field. You know, most business, like I said, you're talking about that 2 to 3%, and you usually know who those accounts are.
So where it's the same really is the 838 is billable, it's not actually income. That's the.
It's considered income in the accounting
If it was
terms.
paid, yeah.
You know, this is,
Mr. Cooley online?
Yeah, so the understanding I have with this from being on that committee, back when Darren was running it, you have to bill at that rate. So if those ambulance fees invoice, those are billed at that rate to get the maximum Medicare, Medicaid. So the reason, that's part of the reason why there's such a large write-off, because, and this is the way it was explained to me many years ago, is that we have to charge, and I'm just gonna grab numbers, we have to charge $1,000 to get $400 or $600, whatever that 40% is. And that's why you have them write-offs. Now, that's the way it was explained to me, and I think that's what you're seeing here, is why them write-offs are so large, because if you broke it down into patient care, you'd probably see that the majority of our ambulance services, that's exactly what it is Medicare, Medicaid.
and we have some of that here too, when you're looking and saying, okay, well, here's a piece that's Medicaid here, here's another piece that's, you know, these are just Medicaid, you know, and I'm sure some of these other ones, probably if I expand them out, you're gonna have Medicare in there and stuff too, again. I do have all of this underlying data, it's just a matter of how much we can show in terms of this file because of patient confidentiality, but I didn't figure, you know, I could have expanded this, I don't know how many pages it would have been if I expanded it for you all, but let's see.
But I think the question, or my question is if we look at the Medicaid invoices and then we looked at the receiving of it and see what the difference is.
Yeah.
And that might explain a lot of these write-offs, at least you could kind of sort it out to where, okay, this is what it costs us because of this, and this is what this is, right? I mean, it gives it an explanation, it doesn't solve the problem, but it gives it an explanation of what it is.
Correct, yeah. I say that's a very, very true statement. So I have expanded this, you can see it's just various insurance companies, again, expecting to, you know, collect a portion of these. It's just a matter of how much it is going to be at the end of the day.
Let me get Mr. Even first, and then I'll come back to Mr. Carroll.
Just to reiterate, Mark is absolutely correct. You bill it out at your full rate. You still bill it to Medicare, Medicaid at the full rate. They write it down. It goes from them to, if the patient has a supplemental plan, it goes to them for further payment review, and after that, then it ultimately gets to the patient for the copay. So there could be multiple steps before you even get through this, getting it from initial billing to your three different sources of collection on this single bill. But yeah, you can write over 50% of it off just through Medicare, Medicaid, and it's going to show up in that expense line. But as she said, your accounting principle, you record it as an overall gross revenue. Your net revenue isn't going to equal that, but your gross will. Then just a question, because I was here when we went through 2 different billing services that time. Your 2015 through 2018, 2020 receivables are all done through Savoda. Are they still carrying balances where they're trying to collect, or are these receivable years long gone that we're never going to, I say we as in the county, never going to see again? And I'm not trying to put anybody under the, you know, I'm not trying to put a target on anybody here, but that's just, you know, there's a lot of turnover that Savoda was kind of tracking some of that and sending the monthly reports, updating those years. Are we still getting that? I mean, are they just chasing what they can chase.
Yeah, I think we've seen very little movement on that, and that's where, you know, some of this line comes in too, where if we have collected something from a prior year, we would see it here, but this is just such a minimal amount compared to what we've written off. So we can be collecting it slowly. As I was going through the billing data, there are people that are set up to pay anywhere from like $10 to $100 a month. And it will take a long time to have that show up on our financials, so.
Jeff, one question from me. Any idea what your write-off is up in Cas? I mean, not by gospel, but just.
Not off the top of my head, but a typical trip from Casanova to Reedsburg Hospital, our bills running around at least $1,000. I haven't checked the Medicare rate recently, but we used to be happy to get $350 out of that. So $350 to $400, and that's not for that's not ALS service either. That's just BLS. So if Richland throws an IV in and it qualifies for the next tier level, that changes your reimbursement rate as well. But
thank you, Mr. Carroll.
I don't follow all this Medicare, Medicaid markup stuff, but at the end of the day, our revenues are not covering our costs.
Correct.
So I just want to make sure all this information, what backed up or built us up to the new rates we're now saying, and so that they need to be that.
Yes.
Yeah.
And if you look at this sheet, you'll see that things started to flip, where we were overspending starting in 2023.
Yeah.
So if we were to do something to back those rates off, we have to get funding from someplace else.
Correct.
Be it the levy exemption or something.
Correct.
Okay.
Mr. Chair,
Yes,
I believe Barb maybe had something to say. I saw her hand up on the video.
okay. Barb, question?
I was just going to mention to Jeff's comment, Savaka was bought out by EMSMC, so any income that we're seeing from Savaka is actually coming in through EMSMC now.
are they still
You're not
sending you
going to see any
updates?
more income from them, exactly.
Go ahead, Jeff.
I said, are you still getting reports from them from prior accounts?
I have not seen any since I took over.
Sure.
But I assume that those are going directly to the treasurer.
Further
Because I know
questions?
there are-
Go ahead, Barb, sorry.
Oops, I know there are incomes coming in from them.
Further questions in regards to the financial statements?
Oh, I had just a little bit more, we kind of got
Okay, go
derailed
ahead.
here a little bit, that I did want to go back to. So we touched on the asset side of the balance sheet, and I am sure probably the understanding is there, but I did circle this box at the bottom of the balance sheet that shows your total revenue, your total expenses, and your kind of plus or minus over under. Either you got a surplus or you have a deficit. So what both of these show is that we are running a deficit year-to-date approximately $33,000. So if for some reason, so you can see on the 8/31 balance sheet, our fund balance was $297,000. But now that fund balance is only $108,000. And so that decrease there really related to that uncollectible entry that we put in, that booked between those two, and then brought that fund balance down. Now, if we were to close the books tomorrow and say today is December 31st and we were going to close, your new fund balance is going to be $75,000. So you can see it's decreasing. And every time we have a deficit each month, it is going to continue to decrease that fund. The only way that fund is going to go up is if we start making money and profit somewhere. Now, the other thing I did want to point out as well, and so we kind of touched on some of these, so I've got a monthly statement in here. I worked with the people at Tyler. I saw the report that was going out before, the cash book, I guess, that everybody was seeing prior to my arrival. I did look at it, I reviewed it, I tried to tie it out to what was in Tyler with little to no success. And I said, nah, this isn't working. It's too much manual work that was going into it. Stuff was coming from areas that it shouldn't be coming from. So when I mentioned that your balance sheet is a point in time, I mentioned your income statement is the entire year. And so from January to December, your income statement is telling a story. It's telling the story of your revenue collections and your expenses going out. If something hiccups or happens, you'll see it there. So what I want to do going forward, for as long as we're doing this and the county is administering this, is you will be seeing this activity report. This comes right out of Tyler. There's no manipulation being done to it in any way, shape, or form. I just dumped it out to here. I cleaned up the formatting a little bit. And then this shows you your revenue coming in by month. It also shows you your expenses going out. So if for some reason there are holes, we might ask ourselves, well, why do I have a hole here in part-time salaries? Did we not pick something up? What's happening? You know, so it allows us to have a look all year to see if something's missing or, oh boy, where did that expense come from? You know, so I had a couple of those moments as I was going through this, and you can see there's that big ugly line called write-offs right there at the bottom, you know, haunting us. But what I saw too, doing it year over year, so we'll continue to produce this statement too year over year, so you can see the trend lines, you can see how things are going, you know, whether or not things are increasing, because as Mr. Clements mentioned, you know, we can see in our salaries what happened. We can know what happened. So we went from, you know, kind of having a volunteer part-time crew to, hey, we're fully staffed right now. We have a full crew, maybe minus a director here for a few months out of 2025. But that is what's kind of happened in our salary lines and benefits. You know, we can see how things have changed. Look at the change in healthcare costs alone as we're talking about open enrollment. You can see how these have really increased starting 2022 to present. So again, you increased your staff a little bit, but you also have increasing cost here. We got into a new building starting in, 2022, you moved to an actual building for your ambulance service. With that went increased cost as far as having the lights on, heating that building, telephone cost increase. So you have all of this information now at your fingertips. And it is tied out, it is audited, and it is the correct information. So anybody that needs to see it or wants to see it, this is what we have. But I did point out a couple of things where they did catch my eye. Again, if you're looking at a report year over year or month over month, you're going to look for things that, whoa, why did we spike there? So like in 2023, we had a big spike in ambulance maintenance. So we had a unit, I guess, go down at that time. We also, in that same year, purchased an ambulance. So we had, or said we were going to purchase an ambulance. I think we purchased it the next year because we took $40,000 out of Fund 510 and we moved it into into 160, which was to buy a new ambulance. So that's where that went, and we did do it. We went out and we bought an ambulance. It needed some work to get it up to where we needed it to be, and we spent that money. But again, it's showing you, and this is things that you can look for as you're going through these statements. And you can see where we've been, how, you know, things have changed year over year, and expenses have stayed, you know, relatively consistent. I commend the group actually in keeping their expenses, you know, as good as they can in these tough times, you know. So I think they've done a wonderful job in 2025 of actually controlling those when they could have really, really skyrocketed. So I had some, oh, go ahead.
I'm not sure who to ask, but where do you think stands with getting a committee together that's going to try to work with the municipalities and townships to figure out what we're going to do?
So for right now, we're still looking at trying to just get things rolling for 2026. Once that is completed and we have a contract in place and we have the ability to continue to provide the service because we have people utilizing our service, then what I would like to do is try to get Mr. DeYoung, who was on our call last week, to come and give an informational session to really start to talk about, you know, here's different ways to bill it. There's also an individual, his name is Jim Small from UW system, that can also come in. He's rural health. Have him come in and talk about what the options are, and then have an informational or a listening session. Have the community come and give us their input. But ultimately, it is up to this board, the Richland County Board, to make a decision on what's going to happen moving forward in 2026.
Understood. I'm trying to understand, is the MOU signing deadline still November 1st at the new rates?
As of right now, that's where we are at, but I know Andy was planning to talk with their legal counsel today, or as soon as he's able to talk about trying to get together.
It's the 27th. Okay.
So, yeah, I had a few more slides in there, you could just peruse through them. So I did pull kind of the population data that we had out on our website, total populations by the people or the municipalities involved, your prior contract volumes, your prior contract rates, the proposed contract volume and proposed rates. And then I did some math kind of allocating based on population, what it would look like per person, and what it would look like if you did it at $30 per person in every household. So we'd actually be pulling in more revenue if that was the case, so from the municipalities based on that. But, so there's some of that data. I don't know if Trish wanted to go into the call data or not that we have, but this is what we did receive. I know there may be a few adjustments. What we did is we pulled out Pine Valley, we pulled out the fair, and we pulled out the county buildings so that we could show the numbers without those in there. And I did talk to Brittany out at Pine Valley, and I got their capacity number and kind of treating that as their population out there. And then just kind of gave you a little oversight in the graph form here of sort of the average of calls versus the population. So that is, and then there were some reports in there from the AS400 that simply just showed again that old system we were using and the revenue and how it was going into Fund 51. So it's never really gone into the general fund. If it did, it was because we didn't know where it was supposed to go. And it doesn't stay there, it gets moved to his actual fund once we have a home for it, so.
I think one of the big questions that the JAC asks on a pretty regular basis is where is our cash balance? I think this, the 2019 through 2025 Excel spreadsheet that she shared very clearly shows that starting in 2023, that's where the cash balance, why the cash balance got depleted, is that our expenses have far outweighed our revenues, and that's where it went to. It's not because the county has been squandering the money or mismanaging it. We have to remember we've had inflation in here that's been pretty significant, and I think every single person's household has been impacted by that. We've had the wage increases, plus we've lost volunteers. We just don't have that, and that's with every single EMS entity out there. The number of volunteers continues to go down. And we moved into our own building, which added expenses on. So those are three very concrete things that help support where the money has gone to and help show that we're not squandering the money away and that they are going to continue to run this service. And if we could have volunteers that run the service full-time, that would be fabulous. But that just isn't an option that's out there.
Yeah, and I think this last one I share too, just the top of this one is what Administrator Clements is referring to. So you can see in 2021 kind of, we did have a little surplus. In 2022 we had just a little surplus, but 2023 comes along, you start getting those big, again, those write-offs or those allowance for doubtful accounts in both these years. And that's really the story of where that fund balance has continued to decline year over year.
And I think the balance sheet really shows if we honestly got absolutely positively everything that came in, that's what we would have. But we all know when we work with insurance companies and individuals that it just doesn't work that way with that.
Supervisor Severson.
How do interfacility transports correlate to your billing that you have here and what we did? So you said we made a little. When did we stop doing interfacility transfers or do limited amount of them versus when we were doing them quite a bit before? And how does that play into the billing of what our revenues are?
You have to get that from your billing company.
I was going to say, I don't really have that data available to me in the financials.
They would separate it out by call.
did those years prior that you included, did those talk about our interfacility transports that we were getting versus now we're just doing 911s?
Carrie, we did a lot of interfacility. When I'm looking at the data right now as I comb over it for the townships, the interfacility transfers, 23 and 24 were extremely high in transfers. 25 is not. The difference is we were paying part-time and temp casual employees to come in to do those transfers. A lot of those transfers were turned down by other services because they were private pay, and your collectible amount on those isn't necessarily there. I am very proud of Richland County Ambulance because they would provide that service. We didn't look at who the payer was, we just provided the service to take care of the patient. I know that other services ask the question up front, what kind of insurance do they have? We didn't do that, we took care of the human being. And so that's very commendable. But we're not doing as many now, so part of that is, yes, we're missing some of the income, but we're also not seeing the uncollectible on that part either.
Mr. McGraw, did you have a question? Comment?
I just was looking at the comparison data by year and municipality, and then the sheet that shows all the participating municipalities and what the payment would be per person under certain assumptions. And is that per year? As far as the dollar amounts that are shown?
I would assume it's on a per year because I didn't take it out times any months or anything. I just said, if you were gonna charge each household, each person within your county $30 a year, that's what you would come out to.
And then the difference in revenue, one's 342 and change, the other one's 241.
It's about 100,000.
And that's simply by increasing it
That
from
would,
what it is now to what it, explain that.
okay, so what it is now, where we just ended, because we haven't really got into any new contract amounts, is it's actually sitting at this 150,000. So our new was proposing to go up to 245. I took out Pine Valley, Fair, and County buildings to get you to 241.2. And then that allocated by population gives you that per person rate. You know, again, just me seeing what that would be. And then looking at, I think somebody, it was last week in the JAC that somebody proposed, well, what if we did, you know, an additional tax or something that said, hey, based on household size, we're gonna charge you $30 per person per household, and where would that put us? And that's what that calculation of that 342 is.
Thank you.
You're welcome.
But out of that 342, from what I understand, we're gonna be paying back. I live in the town of Eagle, Brian lives there. I have coverage from Blue River
Okay.
EMS, so we talked about paying them back, so we would not keep that 342 if we charged.
Yeah, so there would be some adjustments done to that, but it's just again to give you an idea.
No, very good.
And somebody else is gonna bring out the proposals and they'll have more numbers behind their proposals and, you know, but just to give you an idea of what that would be versus what we were saying as a county, saying we really do. Our call volume actually looking at 2025 is up to 1162 compared to where it's been. So we are seeing some increased call volumes as well. There's a lot of crud going around, a lot of things happening, you know, and it's just again to try to make up, I think, you know, those pieces will help you on days where, say, it's a calm day and the ambulance doesn't go out to anybody. We still have a full-time staff to pay. It'll also help with that patient responsibility where patients just don't have the ability to pay. And we could see what that amount is too. So that's why we ask that the towns have this fee to help cover just that extra that we need, so. And then here too, again, the 2026 budget is here too. We have it set at 1.3 million. I think if you remember what I said earlier, it's costing us around $100,000 a month to operate that. So you're looking about 1.2 million in the year. This is saying, okay, we added a little to that. County budget has to be balanced, so we need the revenues to go with it. And that's what our budget includes, that 245 to to get us to where we need to be with the patient responsibility. And again, that write-off is in there, we've included it, it's a hefty number, but we got it in there as well, so.
Truly.
If I understood you correctly, I thought you said there may be an opportunity to look at billing and collections and things.
I would
Perhaps.
think what I was looking at versus the various things, so there was, I think it's called EMC was one of the services we had this year. Now we're at Unified. You said there was another one before that. So we've switched these third-party administrators a couple times. All I would say is let's look at the reports, the collection activities being done, and maybe it's something we need to take a step further, but that's again for the rest of the discussions that are going to happen, is for us to reach out and ask other places, what are you doing exactly? Who are you using? Is there somebody better that we could be using to do this? Can we get the information once they're all done with it and try to collect on our own through, reasonable payment plans? I don't have those answers. He's shaking his head, so I'm assuming he knows more than I do on that. So, but these are just thoughts that are going through my head as I was, again, organizing your financial information. I just wanted to be transparent, come here with the data that's in the system, the audited data, show everybody the numbers, so there is no secrecy here. We want to help as much as possible. So if you have any questions, anything else remaining before I kind of end my little spiel or section here.
Thank you for
Excellent.
You're
job.
welcome.
Thank you.
Thank
Yeah,
you.
Mark or Bob or Barb? Jeff?
I just want to say thanks for pulling this together, because this really opens your eyes.
You're welcome.
Thank you.
Thank you.
So as far as your,
Thank you.
as far as your collections are concerned, your billing company typically takes a percentage based off of the income they actually collect. So it behooves them to go out and collect. I don't know of any billing companies that are sitting on calls because they're lazy. I've seen short staffing problems, but when it comes down to the aggressiveness that they collect, that really comes between you and them and how aggressive they want to get. So you can whittle down that receivable, but you're gonna be beating down the door of your social security households on payment plans to collect their outstanding bills. So it really, there's a balance of, yes, we need to fund the service, but also we need to understand the economic situation of our patients. So it's smart to explore billing services. It sounds like we've done it in the past year, but just understand what you're looking for and what kind of result you want to achieve, and really work with your billing company to understand what they're doing. I know Barb gets the reports. I think the clerks and treasurer's office probably does as well, or access to a portal. So, but you're going to carry a high receivable just because of that situation.
Thank you, John, for your input. Any further questions in regards to the financials? Hearing none, let's move on to item 10, discussion and possible action on review of the comprehensive plan.
So this was an item that Steve had requested to be put on the agenda. I did review it this weekend. I think kind of some of the highlights were really the collaboration between us and different municipalities, and then a lot of things related to the land and those land and how we manage our land. I do wonder if part of one thing we should do is put it on the Natural Resources Committee, because there are a lot of items that would fall under Kathy and zoning, because that was one of it, was like cleaning up some of the zoning issues. As far as the intergovernmental cooperative strategies, I think the ambulance service is one that we have on the table that we are attempting to work on, and we will continue to try to work on.
It's been a while, but at one time there was a joint economic development effort. It's split right now, but I'm wondering exactly how much communication there is maybe between you and the city admin or any other thing else where we're trying to continue to discuss things even if it's not formal.
I think since I've been in this role, I've met with Ashley maybe 4 or 5 times. So I think when there are issues that come up, each of us are willing to reach out to each other and talk to each other.
And I'm hoping for, maybe we revisit this where we try to do communication where we don't wait till some issue comes up, but we are trying to look ahead a little more, like that economic development group was doing. I don't know, it would align with what it says in the comprehensive plan in terms of increasing intergovernmental cooperation.
And that's one of the things, like with the road, our proposed road through the campus grant. I've already met with Ashley, talked with her, Steve Board was also at that meeting. So the three of us did sit down together to talk about it, to try to be proactive instead of coming to the point where it's like, we're ready to break ground on a road and the city saying, wait a minute, we don't know anything about this. So we are trying to, as things are happening, to do
But
that.
I agree that the section on land use makes sense for the Natural Resource Committee to start looking at that.
Mr. Severson.
I think we need to continue the ad hoc committee that we did have, that I don't know what happened to that with our reorganization that we had. But remember that we as a board and the city council, as a council, are policymakers. And we set the direction on how the county and the city move forward. And then the administrators implement that and their employees.
Understood.
And so I think we need to go back to that.
Formal, regular meetings between the city and the
Correct,
county.
and we need to go back to that. They may have their little side meeting that they want to have to work together, and that's okay. I lost the word for it, I had before, but we need to, as a board and council, a city, and maybe other municipalities, get together and talk about that direction, and it needs to be considered. So.
You want to share that one?
I don't
believe
disagree.
the chair and the vice chair were part of that committee, you know, when Marty Brewer was our chairman at the time.
Your comment.
I was part of that, so.
Yeah. How long ago did that disappear, Todd?
I don't remember when I'm with Carrie on this. I don't know if it ever formally did or if we just stopped meeting.
It was because of our reorganization that we did.
I think when we reorganized, we took it out of the list because it hadn't met for a while at that point.
I think so too, and so several of us do meet. Dave and I talk all the time. Trish has had meetings that I'm at pretty consistently too. Carrie and I have been talking more. Okay, so the ambulance thing is a great example, but it's one example. So here we all are, wow, read these numbers and go, whoa, I didn't know that, right? How are we gonna pay that? Well, that's one example, but if you look forward, I'm sure if you look at how much of your levy, for instance, police now take, same over there, and I've said several times, it seems odd to me to have two police stations across the street. Another idea, and I think if you always remember that we will remain one small county with one small city, we're gonna have to be pals.
Yep.
And we look at the budget issues, they're nuts. I mean, this is crazy, what inflation has done is crazy, and everybody's revenue has been overrun by nothing any of us could have done. And the school districts now, I'm sorry, I'm on my soapbox.
That's all right.
Did you guys see the article Tony Kurtz, it's on my Facebook feed. I had a brunch last week with Tony Kurtz and Mike Wendell, and I had seen an article online from Civic Media talking about the school district cuts in the area. They're substantial. And I thought, what happened here? So when Tony was in front of me, I said, why did you guys cut all that? And Todd, I'm going to correct you, we didn't. He said, it's a formula I can't even explain, it's more complicated than health insurance. He said, but when the Milwaukee School District people narrowly passed a $252 million referendum, it touched off a formula from a law that's 30 years old that caused a reallocation of state aid to school districts statewide that cut over 300 districts because Milwaukee's getting $48 million in additional aid because of this thing. And so Weston and Kickapoo both lost just about 11% of their state aid. And Tomahawk lost almost 18% of its state aid. You know what Tomahawk is? It was the biggest loser in the state. And all over the place, this cascade was set off when a giant referendum in the biggest school district in the state tripped this formula into gear. So the school districts too, if I'm Steve Board, if I'm running Ithaca, I'm going, geez, because there was nothing they could do. to deal with this, but now they have to deal with this. So all of these entities, we're gonna have to be pals. And we're gonna have to figure out how all this works, because there's not enough money anywhere. There just isn't enough money anywhere. Ask a township, ask a village, right? But we need the things we need, you know, police, fire, ambulance, roads, the basics like that. And the great news is there's nobody in here that was here tonight or that's the council or on your board that would, I think, disagree with that, right? We're all in doing this for the right reason, and we're all dealing with the same math. So whatever committee you want, I love it. I'll be on it. I won't, whatever works. But we're going to have to keep the dialogue going, because these instances like ambulance are going to keep coming at us, guys.
And we have to be forward-thinking.
Oh, man, yeah, we don't want to be here going, uh-oh, nobody caught that, now what do we do? I mean, as you plan, see, I heard that you guys, Mr. Turk told me that for next year's budget, you're going to start working on it really early in the year. So is the city. I'm actually, right now, they're meeting over there, Rules Ad Hoc Committee for the council rules. And one thing that I believe will happen is we're actually going to eliminate our own finance committee to force the entire council to be part of it. There's not 3 of them meeting anymore. All of you, the 8 of them, are going to have your heads on that budget 12 months out of the year, because we're there. I mean, you see how hard this is. And I mean, it's the same thing that Dave's telling me you guys are trying to do, is to not get caught. You know, you don't want to be talking about it the last week of August going, why didn't we see this? Well, us too. And, you know, looking forward, we've branched that out in these meetings that I do with Dave, as Trish comes, it's joint collaboration, we call it. School district comes in, then we have the hospital coming in, we have the Simons board coming in. These different entities that share the same concerns. Because hospitals, look at the Medicaid issues. Oh, wow. Understand that the largest employer in Richland Center is the Richland Hospital. Most people don't realize that. Okay? Ooh, this is not funny. Okay, what's great about the state of Wisconsin, which was an accident, is that when this state didn't accept all that extra Medicaid money, it's also now not being cut. So small hospitals in Wisconsin have a momentary reprieve that other states didn't get. But man, Bruce has had us all over this. Because what if, right? So it's not, I'm not saying that to scare anybody, I think you're already there. But it's more that we cast the net wide, and more people have been coming to talk this all through with us, and I hope everybody here keeps doing that.
Comments, concerns, you want more to cover on the comprehensive? You're good?
I'm good.
Questions on it? Sounds like Mr. Carroll's gonna take care of it all on the... No, thank you. More to come. Mr. Severson.
I just would like to see more dialogue between the county and other municipality, like the City of Richland Center, or the taxing entities like School of Richland Center, District, Ithaca, that are all being able to levy a tax on people. So we levy a tax, we want to build a new building, we levy a tax. Now Richland School District wants to levy a tax, and now the City of Richland Center wants to build a new building. And all 3 of us at once can do separate things and whatever, but it increases the dollar on the majority of people in a smaller location, that dollar amount going up in their taxes. And we need to be unified on that and saying, hey, we got to work together on this.
And I think that's why when there was discussion last week about putting it on the levy limit, you know, adding ambulance, and some people are like, it's simple, just do it. We got to look at all those things, because it does impact every single person who pays taxes here, and we've got to make sure we are thoughtful, because it's not just about adding on people's taxes, but then we also have to pass money off to, like you say, Blue River EMS covers part of Eagle Township. Those are the things that we also have to look at. That's why we can't make rash decisions. We need to be looking at the big picture, engaging other people, having conversations with them, so that when we do make a decision, nobody's surprised. They might not like it, but nobody's surprised.
Good, very good. Anything else in regards to comprehensive plan? That'll be one of our agenda items, Mr. Severson, we can put on for the first meeting in November. I think by 2026, I think it would be a good idea to try and figure out some type of group. Correspondence. Miranda, anything?
I have not received it.
Okay. And then we move on to future agenda items. So we are going to have Mr. Andy Phillips will review the letter from the attorney that we all received. That'll be back at us, if not sooner.
Another update on the status of ambulance service.
Yep. Another update on that. We could start I don't even know what you'd call the group, but we can put it on the agenda. What did you call it before, you think, Todd?
There's a city-county ad hoc committee.
Yeah, I think that's what it was. It was just the ad hoc city county.
But maybe we should think about it and have a further discussion of who else to add. I
That's
think
what
the
I
Richland
think.
School District has got a big populous area, and Ithaca does too. I know Kickapoo comes in, and Riverdale comes in. At what extent they're involved, I think that they need to be involved, but
No, I think
major
that's
players here
Part of
need
what
to be
we'll
involved.
discuss next week, Todd.
It depends on what you want that committee to cover.
Right.
Because, for example, you folks just did a really good thing with the school district on the gymnasium at the campus and the Melville Hall, which soon Simons will be incorporated into the gym. So separate, but on the same topic, kind of. Okay, understand that Weston Schools is now aligned all but one sports team with Ithaca for next year as another example of what's already happening. So what do you want your committee to cover? Because we could have, there's how many, 8 or 9, 8 school districts in the county? Okay, I mean, it depends on how broad you want to go and what we want to cover. Because, for example, Mr. Board at the school district likes to say that he wants every kid in the district to learn how to swim in the pool at Simons. Ithaca's over one hill from here. Well, how about them? Riverdale, how far? It's closer to drive to Riverdale than it is to drive to Boston. Did you know that? I mean, really. So who do you want to invite and what do we want to talk about? Because we could cover an awful lot of ground, and when I tell you, think about what would happen to you if you lost 11% of your state aid. That just happened to Weston, just about hit that, and Kickapoo was right behind them. So they're all going to need to do this. What do you want in your committee? I mean,
I think that's where we start. We get input from this group, and I think we might even just send a survey out via email to the full county board once we discuss it a little bit in November. And hopefully shoot for, my thoughts are by January, like it just go through December and figure it out and have some communications with others. So. The other thing on the agenda will be the RFP for Corp Council. We'll be back and we'll have some numbers. So, anything else? Anybody online for agenda in November 11th?
No, looks good for Bob. That's good. No, I'm good.
All right, thank you, gentlemen, for both attending. I think we're caught up with everything. Looking for a motion to adjourn. Supervisor Carroll, seconded by Supervisor Schoonover. All those in favor of adjourning until November 11th signify by saying aye.
Aye.
Anybody
5 o'clock.
opposed?
5 o'clock.
5 o'clock. Okay, yeah. We haven't changed that.